Welcome back, everybody. Ready for a deep dive into something super important? We're talking FX Psychology 101 today.
Psychology for Forex.
Yeah, it's wild how much of trading is mental. You hear it all the time. It's 80% psychology and only 20% technical skills.
80%? Really?
80%. But it's true. Most beginners just jump into the deep end, though, right? All those crazy strategies and indicators.
Oh, absolutely. I remember when I was starting out, it was all charts all the time.
Totally. But they're missing this huge piece of the puzzle, emotions. Fear and greed, especially, can totally make or break you in this game.
They really can. Those emotions are powerful.
No kidding. So today we're going to unpack why that is. We'll even throw in some practical tips to help you keep those emotions in check.
Love that. Practical is key.
Absolutely. So buckle up because we're diving deep into the mental side of trading. You ready?
Let's do it.
All right. Now, this isn't just some fluffy motivational stuff, okay? We're talking real deal psychology here.
Oh yeah, there's actual data to back this up. Did you know that a 2020 study found only about 11% of retail Forex traders actually make money over a whole year?
11%. Oof, that's rough.
It is. And get this, it takes them, on average, 2 whole years to even get to that point.
Wow, 2 years. That's a serious commitment.
It is. And it just shows you how much psychology plays a role.
So true. All right, imagine this. A room full of 100 Forex traders, all bright-eyed and bushy-tailed, totally pumped about technical analysis.
Oh, I can see it now. All those eager faces.
Right. Fast forward a year, maybe 10 of them are left.
And the rest, gone.
Gone. Vanished. Why? Because they didn't master their minds. Those pesky emotions got the best of them.
Makes sense. It's easy to get caught up in the heat of the moment.
Totally. Have you ever, totally abandoned your trading plan because fear or greed just took over?
Oh, absolutely. Especially in the beginning, it's like you get so focused on winning or avoiding losses that you forget about everything else.
You forget how to think straight.
Exactly. And that's when the mistakes happen. A lot of beginners, they fall into what we call expert syndrome. They think that if they just learn enough technical stuff, they'll be golden.
Expert syndrome. I like that. Makes it sound official.
Right. But they're missing that crucial human element. Trading is just as much about understanding yourself as it is about understanding the markets.
It's like learning the language, but not knowing how to actually speak it.
Perfect analogy. You need both the technical knowledge and the emotional intelligence to succeed.
All right, speaking of emotional intelligence, let's talk about Trader A. This guy, right, he managed to turn $10,000 into 50 grand, and then boom, lost it all.
Ouch. What happened?
Leverage and greed, my friend.
Yeah.
Classic combo. It's like a cautionary tale.
A reminder that risk management is key. Why? It's not just about how much you can win, it's about how much you can afford to lose.
And that's what separates the pros from the amateurs. They're not chasing those crazy wins. They're focused on staying in the game.
Survival of the fittest. Trading edition.
Exactly. They know that losses are going to happen, and they're more worried about protecting their capital than getting rich quick.
They're playing the long game. Smart.
Super smart. So how do we start thinking like them?
Well, there are a few tricks.
Hit me with them.
One of the simplest is something we call the 5-minute rule.
5-minute rule. What's that?
It's easy. Before you hit that buy or sell button, walk away from your screen for 5 minutes. Seriously, just 5 minutes.
Okay, so step away, take a breather.
Yep. Take a walk, grab some water, do some jumping jacks, whatever. Just get your mind off the trade for a few minutes.
That's it.
That's it. It helps you break that emotional momentum and come back with a clearer head.
Like a little reset button.
Exactly.
Love it. Simple and effective. What else you got?
All right, we've got to talk breathing techniques.
Breathing techniques, like meditation stuff?
Exactly. It's straight from sports psychology. Staying calm under pressure is key.
Oh, for sure.
So try something like the 4-7-8 breathing technique. It's super easy. Breathe in for a count of 4, hold for 7, and exhale slowly for 8.
4, 7, 8.
Got it. Do that a few times, and you'll be amazed how much it can help you chill out.
Like having a secret weapon against market stress.
Right. And the cool thing is, it's activating your parasympathetic nervous system, the one that slows your heart rate and all that.
So it's like a science-backed chill pill.
Exactly.
All right, we've got the 5-minute rule, we've got the 4, 7, 8 breathing. What else can we add to our trader's toolkit?
Okay, this one is huge the trading journal.
Trading journal. But I already track my trades on my platform.
This is different. It's not just about the numbers. It's about understanding the why behind your decision.
Okay, so like journaling about your feelings while you trade.
Exactly. Were you feeling scared,
Right.
greedy, Overconfident, write it down. It helps you spot patterns in your behavior.
So it's like your trading therapist.
I love that. It helps you uncover those hidden biases that are messing with your success.
Wow, so instead of just recording what happened in the market, you're also recording what's happening in your head.
Exactly. You might be surprised what you find out about yourself. You know what's interesting too? This whole journaling thing. It can help you see how outside stuff affects your trading.
Outside stuff, like what?
Like social media, all those trading gurus and their flashy lifestyles.
Tell me about it. I've totally fallen for those guaranteed win strategies before. It's like they're making bank, and you're just sitting there feeling like you're missing out.
Exactly. And that FOMO can really mess with your head. You start doubting yourself, making impulsive trades. It's a recipe for disaster.
It's like everyone's getting rich but you.
Right. But you gotta remember, most of what you see online is just smoke and mirrors. They're only showing you the highlights, not the losses and the struggles.
It's like a highlight reel of trading.
Exactly. Don't get caught up in comparing yourself to others. Focus on your own plan, your own goals.
So it's about tuning out the noise.
Yeah.
Right? Focusing on what really matters.
Exactly. All right. We've talked about fear and greed, but there are other emotions that can really mess with your trading. Overconfidence, for example.
Overconfidence, isn't that like a good thing? Believing in yourself and all that?
Well, yeah, confidence is important, but too much of it can be dangerous. When you become overconfident, you start taking unnecessary risks.
So it's like you get a little cocky and forget about your risk management.
Exactly. Remember Trader A, the guy who blew up his account after that big win? Overconfidence probably played a role in that.
Okay, overconfidence makes sense. What about like boredom?
Yeah.
Can that even be a factor in trading?
Oh, absolutely. Imagine you're staring at the charts all day and nothing's happening. The market's flat. You're just sitting there.
This is pretty boring, yeah?
Right. And that boredom can lead to overtrading. You start taking trades just for the sake of taking trades.
Whoa, I never thought of it like that. So just being in the market, even when it's slow, can be a trigger.
Totally. It's like when you're stuck at home on a rainy day and you start online shopping even though you don't need anything.
You're just looking for something to do.
Exactly. And in trading, that something to do can cost you a lot of money.
Yeah, those impulse trades can really add up. So how do you fight that boredom? Just step away from the charts.
That's a good start. Take a break, go for a walk, read a book, do something else entirely. And when you come back, make sure you're only trading if there's a real opportunity and not just because you're bored.
Okay, boredom. Checked. We got to talk about fear, though. That's a big one for me, at least.
Oh, yeah. Fear is huge. It's probably the most powerful emotion traders face.
It's like when a trade starts going against you and your heart just drops into your stomach.
I know exactly what you mean, and your brain just goes into panic mode. It's like fight or flight kicks in.
Totally. You start second-guessing yourself, making emotional decisions.
And that's when the real damage happens. Fear can make you hold on to losing trades for way too long, hoping they'll magically turn around.
Or even worse, doubling down on losers to try and make it back.
Ouch. Yeah, I've been there. It rarely ends well. It's like digging yourself into a deeper hole.
So how do you deal with that fear? Is it even possible to, completely eliminate it?
Well, I don't think you can ever completely get rid of fear. It's a natural human emotion. It's about learning to manage it, not letting it control you.
So it's about, recognizing the fear but not letting it dictate your actions.
Right. And sometimes the best thing to do when you're feeling super fearful is just to step away from the market. Take a break, clear your head, and come back when you're feeling calmer.
So it's like, don't force yourself to trade if you're not in the right headspace.
Exactly. And remember, sometimes the best trades are the ones you don't take.
True that. All right, let's talk about the other side of the coin. Greed. It's like the evil twin of fear.
Oh yeah, greed is a sneaky one. It whispers in your ear, just one more trade, just a little more profit.
It's like it disguises itself as ambition.
Right, but really it's just pushing you to take unnecessary risks.
It's like when you're winning at the casino and you think you're on a hot streak, so you keep betting bigger and bigger.
And then you lose it all in one go.
Exactly. Greed can make you chase those unrealistic profits and throw your whole plan out the window.
And ultimately, it'll sabotage your long-term success.
So how do you keep greed in check? Is it all about setting strict profit targets and stuff?
Well, that's part of it, but it also comes down to mindset, cultivating a sense of contentment and gratitude. Celebrate your wins, but don't let them go to your head.
So appreciating what you've already earned instead of always wanting more.
Exactly. Remember, trading is a marathon, not a sprint. Pace yourself, be patient, and focus on making smart, disciplined decisions.
Okay, so we've talked about all these emotions: fear, greed, overconfidence, even boredom, and how they can really mess with your trading. It's like a whole emotional roller coaster. But how do we actually start building that unshakable trader's mindset? Something that can handle all that pressure.
Well, one of the most powerful tools, and we touched on this a bit earlier, is mindfulness. It's all about being present, aware of your thoughts and feelings in the moment without judging them. So instead of getting swept away by that panic when a trade goes bad, you just observe it.
Oh, I see. So it's not about ignoring those feelings, it's about acknowledging them.
Exactly. You're not trying to suppress them. You're just creating space between the emotion and your reaction.
So you can actually make a conscious decision instead of just reacting impulsively.
Exactly. That's the key.
Okay, that makes sense. But how do you actually practice mindfulness, especially when you're in the middle of a crazy trading session?
There are a bunch of different techniques, but honestly, one of the simplest and most effective is just focused breathing. When you feel that surge of fear or greed coming on, just take a few deep breaths.
Deep breaths, focus on your breath. That sounds familiar.
Right. It's like a mini timeout for your nervous system. It helps you calm down and regain control.
Love it. Simple and effective. What other mindfulness practices can traders try?
Well, meditation is a great one. Even just for a few minutes each day, it can make a big difference in managing stress and regulating your emotions. And then, of course, there's yoga, which combines physical movement with mindful breathing.
Okay, so meditation, yoga, those are good.
And don't forget about spending time in nature. It sounds kind of cheesy, but it really can help.
Yeah, it's funny, right? We're talking about trading, which is all about technology and charts and data. But some of the best solutions are actually about disconnecting and getting back to basics.
Exactly. It's all about finding what works for you, what helps you create that sense of calm and clarity amidst the chaos of the markets.
All right, so mindfulness is key. What else can we do to build that strong trading psychology?
Well, another crucial element is setting realistic expectations. Remember that study we talked about earlier, the one about how few retail traders actually make a profit?
Yeah, the one that burst our bubble of becoming overnight millionaires.
Exactly. It's so important to go into trading with a realistic understanding of the challenges involved. This isn't a get-rich-quick scheme. It's a skill that takes time and effort to master.
So ditch the Lamborghini dreams and focus on building a solid foundation first.
Right. Learn the fundamentals, develop a robust trading plan, and master the art of risk management. Those are the keys to long-term success.
And remember that losses are going to happen. It's part of the game.
Exactly. Don't let those losses derail you. View them as opportunities to learn and improve.
It's all about having that growth mindset, right? Yeah. Embracing those setbacks and using them to become a better trader.
Absolutely. Now, here's another practical tip. Create a structured trading routine.
A routine? Like, what do you mean?
I mean, set specific times for market analysis, for executing trades, and for reviewing your performance. Create a schedule and stick to it.
So it's like having a job, but you're your own boss.
Exactly. It creates structure and discipline, which can help minimize those impulsive emotional decisions. And it helps create boundaries between your trading life and your personal life.
Okay, it makes sense. So we've got mindfulness, realistic expectations, a structured routine. What about support from other traders? Is that helpful?
Oh, absolutely. Connecting with other traders, whether it's online or in person, can be incredibly valuable. It's like having a team. People who understand the ups and downs of trading and can offer support and guidance.
It's like finding your tribe, your people who get it.
Exactly. And don't underestimate the power of accountability, having someone to help you stay on track with your goals.
All right, before we wrap things up, I want to remind everyone that building a strong trading psychology is an ongoing journey, not a destination. There will be times when you slip up, when your emotions get the best of you. It happens to all of us.
We're all human after all. Nobody's perfect.
Right? The key is to learn from those mistakes and keep moving forward.
It's like training a muscle. The more you practice mindfulness, emotional control, and disciplined trading, the stronger that muscle will become.
And the better equipped you'll be to navigate the markets and achieve your goals.
Exactly.
So as we wrap up this deep dive into the fascinating world of trading psychology, we want to leave you with this. Think back to your most recent losing trade. What emotion was driving that decision? Was it fear, greed, overconfidence, something else? By honestly reflecting on your past trades and identifying those emotional triggers, you can start to develop strategies to manage them more effectively.
Remember, mastering trading psychology is a journey, not a destination. Be patient with yourself and never stop learning.
That's great advice. And on that note, folks, happy trading.